Good morning, SMF Street Traders, and welcome to everyone around the world. What we're going to take a look at this morning is the S&P futures are gapping down in pre-market and what's been going on around the world. Today's date is 8/24/2010. The time is 3:40 a.m. Pacific Standard Time. And basically, we are going to take all of our clientele through the monthly chart. The very disturbing thing here about the monthly chart is on the S&P 500, when we had called the tops up here and told people to go to cash, is that this big month of May is a very big overhead resistance, and that's half of the SMF Street bar. The problem that's disturbing is the 10-month moving average. When the S&P was rallying last year in 2009, we made the great move here. What a nice trade that was. And basically what we have here is we have a lower high reversal. So the buyers came in July. The problem is we came up, and as we have said in many times going short or long the S&P, is that we come up here, we have made a lower high on the monthly resistance of the SMF Street Pro Trading Bar. Therefore, we're closing below the 10-month moving average. What does this really mean in all terms? It means one thing, that if we break below the July lows, which is right here on the chart, on this monthly candle right here, we stand to go a lot lower in the S&P, and our next support will be around that 954 handle. Okay, we're going to come and approach, and a lot of this will not be decided, folks, until we get past Labor Day. But the chart pattern is this. Is the reversal and not being able to get up above 1130 on the S&P. This is the SMF monthly reversal bar, and we have a formula that we use in these monthly bars. So basically what I'm trying to tell you is that we've made an official lower high, and this potentially turns into a double reversal that has a bigger implication to the downside than what the upside would be. Now, granted, like I said, it is 8/24/2010. The thing that I want to make very important on this chart is this monthly SMF Pro Trader bar is the range that we're in. But there's only a few months left. If we break below this, we're going to come down. If we do not hold this 1050 handle right here on this bar, 1055, so you can go between 1050 and 1055. It'll be 1055 on the S&P on the way down to support. And with U.S. futures gapping down today, this is a bear market signal. And basically, one thing that you want to be advised is that the next leg down is much greater than the original reversal, this big 2-month reversal. This is a big good snapshot here of that 3-month breakout. And this is where we had called the top of the market. But here's the thing. If I break through here and close below half of this SMF Street bar, that means that the downside is going to come down here. And this 20-month moving average is where markets will find support. That's at 1010 on the S&P. That's support level. If we break the July lows, the next support level is going to be half of this SMF bar at 954. And that means that the bear funds are going to come in play. And basically, when people return from vacation after the holiday, coming back in September, when all the institutional traders, fund managers, and everyone's going to be is going to be back in their offices, they're going to be taking a look at one of two things. We call the lower GDP reading. The Fed isn't acting right. So what's contributing is that I'm below the 10-month moving average. So therefore it's bearish. On the weekly front of the S&P 500, I've got a 10-week moving average rolling over. Not only that, when we have the summer rally right here at these bottoms, just like I was showing on the other charts, SMF Street Traders. So when you're going to take a long position, we'll be looking at, if we break this 1050 on the S&P, that's half of the SMF Street Pro Trader bar, that's where the rally went up, and this is where the rally failed and where we were selling short. Once again, you had a very weak rally to these triple tops up here with another reversal, and you got 10-week moving averages declining. You got 20-week, that's about to cross over the 50-week. The 50-week moving average, very important. Look at it slide. That means that this S&P 100-week moving average, that's declining in price, which is very bearish, because at SMS Street we have a mathematical trend analysis. That trend analysis means that, how do I know if it's a weak trend, a strong trend? Well, we have a mathematical system that tells us exactly and what all of these weekly moving averages mean. Well, so basically, once again, it's going to come down to that weekly bar right here, folks. That's where the rally started, up above half of the last bar, the SMF weekly bar. That's the rally. That's a big reversal. There's the turn. Here's the support. There's the declining 10-week moving averages. If you don't know what weekly moving averages are and the power of when they're rolling the wrong way, you know, trends break out when 10-week moving averages are going up. Here's a perfect example when to be good and long. Well, right now is a good time to be short. Start looking at the S&P bear funds. People return off of the holiday and we get back to normalized volume. Nothing changes. GDP goes lower. Lots of things can send, and we can crash these July lows very easily. Not only that, on the weekly chart, what you need to know after showing you the monthly chart is, why am I going to make a lot of money? And what bear ETFs do I use? And what can I do to make money on failure? There's a failure trend in progress. So basically, like always, what we do is we get really fired up about how much money we're going to make on those shorts. And that's what SMF Street Traders are about, is making that money on the downside of the market now. It's just not sitting around here not doing nothing, folks. Okay? One thing that we do here with our trading staff and our traders worldwide that are in different countries, and you can go to the website, I'm telling you now that this is that key breaking point here on the S&P, on that weekly bar. I've recapped the monthly bearish move, and that's exactly where we are. The thing about it is, we will load the system so that when it breaks, it automatically will trigger us short. So that way, if you're not in front of your trading station, but when we start to break through and get a sell-through signal through here, you're going to get triggered in your trades. That's the S&P 500.